Welcome back to the Deep Dive, powered by the OneMoreBitcoin channel. Today, we are exploring a really fascinating space that sits right at the intersection of DeFi, big data, and artificial intelligence. We're talking about prediction markets.
And we're focusing specifically on one platform, Polymarket, because based on the analysis we've been looking at, it seems to have fundamentally transcended what you might think of as traditional betting.
Right.
It's becoming a genuinely powerful tool for information aggregation, a place where, well, the collective knowledge of the market seems to consistently outsmart individual experts.
That's right. And our deep dive today is built on some incredible analysis from the One More Money blog. The piece is titled, How Prediction Markets, Polymarket, Became the World's Most Accurate Intelligence Center. And if you haven't read it, well, let's just say it's an eye-opener.
It is. So our mission today is to unpack the core technologies, the decentralized infrastructure, and the clever economic incentives that sort of enforce truthfulness.
And maybe the biggest piece of the puzzle.
The biggest piece, the rapidly escalating role of AI that's transforming Polymarket from just a website into an emerging real-time intelligence engine for global events.
Okay, let's unpack this, where we explore prediction markets, a place where truth is priced.
To really frame this properly, I think we have to start with a bit of history.
Okay.
The whole concept of prediction markets isn't new at all. I mean, economists have been studying them since the early 20th century. The theory is solid. Markets are just spectacularly good at aggregating information.
Even when that information is, scattered all over the place, hidden across a huge group of people.
Exactly. And those early academic experiments, they consistently proved this. They found that groups wagering on outcomes, like who would win an election, often produce forecasts that were demonstrably more accurate.
More accurate than the expert.
More accurate and more consistently accurate than a panel of highly paid individual experts. It was the wisdom of crowds in action.
But it never really took off back then. Why was that?
For decades, this powerful idea was just stuck. It was constrained by three major roadblocks. First was regulation and geography. These early markets were often stuck inside universities or government projects.
So limited participation.
Very limited, which means limited information getting into the system.
And the second problem was liquidity, right? Or the lack of it.
Exactly.
Yeah.
If you don't have high volume, the price signal is weak. It's just noise. Low liquidity just reflects the opinion of a few people. You need serious capital to get a real signal.
To enforce that truthful pricing.
Right. And the third constraint, which the One More Money blog points out was a fundamental trust issue, was centralized control.
So one person or one company calling the shots.
Yes. If a single entity controls the market, the management, and crucially how it's resolved, you introduce bias, censorship, manipulation. It just kills the integrity of the forecast.
And this is where decentralized infrastructure, the backbone of crypto, completely changes the game.
Precisely. By leveraging the blockchain, prediction markets like Polymarket can suddenly offer permissionless participation. Globally, anyone can join.
And the settlement is transparent. The incentives are just baked into the code.
It's all code. Not a central bank or a regulator. It removed all three of those original roadblocks in one go.
So let's get specific for anyone who's new to this. What exactly is Polymarket?
Okay, so it's a decentralized prediction market exchange. Users buy and sell contracts that are tied to real-world outcomes.
So it could be a simple yes or no question, like, will this ETF be approved by March?
It could be that, or more complex scenarios with multiple outcomes. It covers everything from elections to tech releases.
And the core mechanism is actually pretty simple. It mimics finance.
It is. It's elegant. If you buy a yes share for an outcome, and that share is priced at, say, 65 cents, the market is collectively implying a 65% probability of that event happening.
And it's crucial to remember the platform isn't setting those odds.
No, not at all. The prices are constantly updating. It's all based on supply, demand, and the instantaneous flow of new information. It's organic.
And the reward is simple. Winning shares settle at $1. Losing shares go to 0.
It's a system that only rewards holding the most accurate information.
Okay, this is where it gets really interesting, especially when you think about our current information ecosystem. I mean, we live in a world where media often rewards engagement, outrage, confirmation bias, anything but the actual facts. Polymarket creates a powerful counter-incentive.
And that is the platform's core information moat. It's what the One More Money blog calls capital as a truth filter.
Capital is a truth filter. I like that.
An opinion costs nothing to tweet. But if you want to influence the price on Polymarket, Your opinion has to be backed by capital. If you're wrong, you lose money. You are penalized.
And if you're right, you accumulate capital, which gives you more influence next time.
Exactly. It's a system that ruthlessly strips away emotional narratives and partisan loyalty. It forces objective analysis.
And the proof is in the results, right?
Yeah.
The empirical data.
That's what they say. Across major political events, economic data releases, Polymarket prices have consistently been reported as more accurate than the established consensus, more accurate than polls, even more than expert panels.
Okay, let me challenge that for a second, because this is where a skeptic might go, wait a minute.
Sure.
If capital is the filter, doesn't that just favor the whales? The wealthy individuals or institutions with huge reserves? Isn't it just whale wisdom instead of crowd wisdom?
That's a really important question, and the analysis addresses it. Yes, large capital allows for greater influence, but that capital is also highly, highly motivated to be correct.
Because they have more to lose.
They have much more to lose. If a whale consistently throws money at an emotionally satisfying but false outcome, they quickly lose that capital, and they lose their influence. The system is self-correcting. It's not the size of the capital that matters in the long run, it's the predictive hit rate.
Okay, that makes sense. The cost of being wrong is the filter. And it highlights that structural difference between a market and a poll.
Absolutely. A traditional opinion poll measures stated preferences, what people are willing to say.
What they want others to hear them say.
Exactly. Prediction markets measure revealed belief under risk. You might lie to a pollster, but you'll rarely put thousands of dollars on the line for a belief you don't truly hold. That risk is the foundation of its accuracy.
And the sheer diversity of the markets must help too. It's not just one thing. It's politics, macroeconomics, technology, AI releases, crypto, everything.
That diversity is crucial. It encourages cross-domain arbitrage. Someone with specialized knowledge in, say, shipping logistics can use that to profit on a macroeconomics market, making the whole system smarter. It pulls information from everywhere.
Let's pivot and get into the tech that makes this all possible. Because this scale isn't possible without a serious backend. The platform's built on Polygon, which is a layer 2 for Ethereum.
And that choice of an L2 is highly strategic. Early dApps on Ethereum Layer 1, they suffered from huge gas fees and slow confirmations. Polygon just bypasses all that.
So you get super low fees, which you need for frequent trading.
You do. And the speed is critical. In these markets, an information edge can disappear in seconds. But the genius part is that by building on Polygon, they still get the security guarantees of the main Ethereum blockchain.
So it's the best of both worlds.
It is. Security from Ethereum, speed and low cost from Polygon.
The One More Money blog also mentioned a hybrid order book model. What is that?
Right. So think of it this way. To match buyers and sellers super fast, they do that part off-chain.
For speed.
For sheer speed and scalability. You need that to handle the massive volume spikes you see during something like a US election. But then the final settlement, the custody of the funds, that happens on-chain. Secure, transparent, trustless.
So you get the speed of a centralized exchange, but the security of the blockchain.
You got it.
Okay, that brings us to the final piece of the infrastructure puzzle. Market resolution. How do they decide who won? Who makes sure that's not just some guy in a back room clipping a coin?
That is the role of decentralized oracles. Polymarket uses systems like UMA. These oracles are what bring verifiable real-world data onto the blockchain, and every market has objective resolution criteria defined right from the start.
So this feeds right back into that whole truth is price idea.
It does. With a system like UMA, the participants, the voters, are economically incentivized to be truthful. They have to put up collateral. If they vote for the correct outcome, they get rewarded. If they vote maliciously or incorrectly,
They lose their collateral.
they lose it. The entire system is designed to make manipulation prohibitively expensive. It's economically foolish to lie.
Now we get to the part of the One More Money blog that I found most fascinating, the most transformative element. The arrival of the AI-powered traders, the hunters as they call them.
It really is something else. We are watching the institutionalization of these markets in real time. These AI hunters aren't human speculators clicking buttons. They are highly sophisticated algorithmic systems.
Combining data ingestion, machine learning, and, I assume, ultra-fast execution.
Yes. Their entire purpose is to spot an informational edge and act on it before the rest of the market, before humans even realize that information exists.
So what kind of data streams are we talking about? What can they see that a person can't?
Well, everything, but at machine speed. The blog gives some great examples. They're scraping social media, obviously, but they're also drilling down into things like GitHub repositories.
Oh, like code repositories?
Yes. monitoring commit activity, regulatory filings, tiny changes in API documentation, even leaked metadata. Imagine an AI detecting a subtle change in a software branch that signals an upcoming product release. It trades on that information immediately, weeks before the company makes an official announcement.
That's machine speed versus human reaction time. It's not even a fair fight.
And they're using advanced language models too, right? Something like xAI's Grok.
Exactly. They deploy these sophisticated LLMs that can analyze millions of posts instantly. They can front-run narrative-driven price moves by detecting shifts in public perception before they hit the mainstream.
So if a big story is bubbling up on some obscure forums,
The AI is already positioning itself before a human trader has even had their morning coffee. And because Polymarket has all these different categories, these AIs must be doing cross-market arbitrage.
at a massive scale, when a new inflation report drops, the AI instantly calculates how that should affect a related crypto market or a tech stock prediction. If those markets are out of alignment for even a fraction of a second, the algorithms capture those tiny high-frequency profits.
This completely transforms the marketplace. It's a deeply adversarial environment. The average retail user is no longer up against another human with a hunch. They're competing against optimized information warfare algorithms.
It absolutely raises the bar. The One More Money blog makes a key point here. Relying on intuition alone is now a fast path to getting liquidated. For retail participants, success is going to require specialization in niche areas where human insight still has an edge and much stronger data literacy.
Let's shift to the economics of the platform itself. It seems Polymarket is focused more on growth and liquidity than on just extracting fees.
That strategy is essential. The focus on growth brings in the large capital pools needed to generate those high-quality signals we talked about, because the true lasting value of Polymarket's data is increasingly external.
What do you mean by that?
I mean, the real-time probabilities generated by the market are being integrated into other applications and, critically, into third-party AI systems.
Ah, I see. So the data itself is the product. It's being used as training data for other forecasting models or as real-time signals for other automated systems.
Precisely. It's becoming a foundational forecasting layer for other technologies. And you can see this in the on-chain metrics. The total value locked, the TVL, frequently hits hundreds of millions of dollars during big events. Monthly volume can exceed several billion in an election year. That's real scale.
But with that scale comes scrutiny. The source also stresses the big risk factor here is regulation.
It's the single largest external risk. Regulatory classification risk. Agencies like the CFTC are trying to figure out what these things even are. Are they gambling platforms? Are they derivatives exchanges like the stock market? Or are they just information services?
And that distinction changes everything, especially for access in places like the US.
Exactly. The technology is global and permissionless, but the legal environment is fragmented. That creates huge compliance challenges.
Which brings us to the future vision from the One More Money blog. They argue the Polymarket is unlikely to stay just a standalone platform. It's positioned to evolve into foundational infrastructure, an embedded forecasting layer within AI systems.
It's a powerful symbiotic relationship, a feedback loop. AI improves the market's efficiency by making price discovery faster and more accurate. And in return, the markets provide high-quality, capital-weighted training signals for the AI. Each makes the other smarter.
So the final verdict from the One More Money blog is pretty clear. Polymarket is way more than just a crypto betting site. It's an emerging intelligence engine that prices reality through adversarial incentives and transparency. But participating now demands discipline and a real strategy.
And if we just zoom out for a second, it raises a really important question for you, the listener, to think about. If these decentralized adversarial markets can so accurately price geopolitical and tech outcomes by filtering truth through capital, what are the implications for our traditional institutions? For centralized planning, for legacy media that rely on consensus forecasting and public polls for their authority?
A truly provocative thought to chew on. Before we wrap up, we want to briefly remind you about the disclaimer, which is available at the end of this video. Remember, all this information is for educational purposes only and is not investment advice. Always do your own research. Thank you for watching this deep dive. If you are interested in cryptocurrencies, RWA, DeFi, and Bitcoin investment, be sure to subscribe to the OneMoreBitcoin channel right now so you don't miss out on our latest videos. And please, like the video and comment below to share your thoughts on prediction markets. We love hearing how you think about these complex topics. Thank you for watching again, and we'll see you in the next podcast about blockchain, Bitcoin, and crypto.